Well, hello and welcome and hello. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. It is about 8 a.m. out here in beautiful sunny Los Angeles on September 5th, 2023. It is a Tuesday after the holiday weekend. Guys, welcome and hello. Thank you for tuning in. If it is a Tuesday or frankly any day that ends in a Y, we are going to talk with you about SOFI Technologies Incorporated, ticker symbol SOFI. Guys, SoFi stock is down 13 cents today on moderate volume of around 6 million shares traded. Came out with sort of its patented mountain and hump type of deal. Two quick peaks. One, the algo traded for the first 15 minutes. Um, the other came about a half hour later and then just a huge dump. I expect this is completely artificial and it will go back up. I'll show you in just a minute that we see these V-shaped patterns on SoFi all the time. It's basically because, algorithms control this stock for the most part, run pump and dumps, take it up, take it down, and often in these mirror image patterns that people mistake for bullish or bearish reversal patterns because they might be that if there were just human beings buying and selling these shares so you could actually gauge market sentiment. But when it's all mechanics, just algorithms trading the shares to get certain behaviors out of retail so they can keep making money, scalping pennies, um, shorting the stock, killing options, just on and on and on. There's like probably 100 ways that market makers take money from retail investors in SoFi, and a lot of SoFi investors are going to go, "Well, I'm long. There's nothing they can do," but you're not. Like a lot of you guys trade in and out way too often, and trade on emotion and buy the pump and sell the dump. I say, you know, uh, sell the dip, smell the rip. Like you're just not in it at the right time because the market makers and the media and the analysts are able to control people's emotions to a high degree, and they control their behavior of retail. And there's so much retail money in this stock that you know market makers have just fleeced us over and over and over again. Let's take a quick look at the chart, guys. Chart to me looking extremely strong. People who saw a bear flag here, really idiots. You can't call that pattern without looking at these two support lines. This one that's extremely significant at $8.13 has been you know, a very significant pivot point and resistance and support line going back like a year and a half. And they just discount that. And then this blue trend line, we're trying to get back into this channel. We've actually done that. And rather than recognizing this for what it was, which was the stock regaining the support and regaining the channel and actually support holding from where it flipped in June. They just go up. It's a bear flag. I saw it on a chart. The stock comes down and trades over like a hockey stick. It's like, dude, you got a hockey stick, where the sun don't shine because that's not what this is. Like this is, an overreaction to the pump and dump after earnings. This is market makers and mechanics doing their thing, reaccumulating the shares. They're actually covering now, and then the stock is clearly in an upward move over the last week plus, making higher lows and higher highs. So I don't 891 guys, I told you this last Friday. 891 is going to be really sticky resistance. This is the top end of this channel, 813 being the bottom end that we've been talking about, for several months now. And I'm not, I don't want to see this. I want to see it break through 891, and then I think it'll go back up to 10. But it's also very possible, guys, that we're going to get rejected at 891 and start trading back in the channel from 813-ish to 891. That's, not going to be surprising at all, given the fact that, we're not expecting net profit in Q3. I don't expect Q3 to look all that great on the ER. I think it's all leading to a setup for Q4. So they're going to try to front load expenses in Q3 and basically make Q4 that golden quarter where everything aligns. They cut down the spending, they increase the profits, they let all those products and members work, and guarantee that gap net profit that they've been promising. Couple of things to talk about, guys, that have just been getting a lot of media attention. One is this Instacart IPO. Okay, SoFi to write first big underwrite first big IPO after securing Instacart listing, and I was watching the guys on Future Investing and Steve Areno, Mitt and Tevis. I forget the name of the blog when they're all four there, but they were arguing about this, and Amit was basically saying that this is just some of the smart money dumping this hot garbage that they've been investing in private equity onto retail because they just don't want to own it and it doesn't make any money. I don't think he really understood that Instacart is a little bit more than grocery delivery, but I don't think that's really the issue. SoFi's offered a lot of this, SPAC garbage from Chamath and the Rivian IPO and stuff. Of course, yeah, you would have made money if you flipped that stock right away, but if you're still holding it or you held it and sold it at the lows and gave up on that war of attrition, you just got absolutely killed. So the argument the boys were having was like, well, is this good? Is it exposure? Does it, not only put more eyes on SoFi, bring more members to SoFi, but just give SoFi more gravitas and credibility? And then on the other hand, was basically Amit arguing that, this is not getting your money right because, this is some incubator, some, private equity just dumping their garbage investment onto retail to make a big profit when the underlying company is not actually going to make any money in the foreseeable future. I think both arguments have a certain amount of validity, but I like SoFi to get into these more legitimate IPOs, not just these SPAC companies where it's like the SPACs are kind of a scam in one sense. I mean, SoFi's a legitimate company, but what happens is like Chamath just gets a huge amount of shares, like hundreds of millions of dollars or what, millions and millions of shares, basically for doing absolutely nothing, for setting up, a blank check company and getting a bunch of idiots to give him $10 a piece, send $10 now, text Chamath to 224. It's like, so many of his companies have just crashed and burned. I think, some of them have been good, but you have to be selective about what you offer your clients. Like, I think this could be an actual good, legitimate IPO, but I think the key for SoFi is to look for quality. You don't want your name to be associated with like pump and dump garbage that is just, your private equity buddies and your buddies on Wall Street just dumping a bunch of dog shit on your members. That's not good for anybody. But anyway, they're talking about how, winning a role on the most high profile US listing is a milestone for SoFi, but it's been a slow road. They wanted to get into IPOs back in March 2021. Pointed a recent meme stock mania, be an underwriter on several IPOs coming weeks and months. It didn't really materialize. There have been 5 deals, all of which involve SPACs. Um, and they were 4 of the 5 were led by Chamath, a serial blank check company back. I think Chamath has lost a lot of his luster. I think his reputation as some kind of magic man or whatever you want to call it, he doesn't have any special sauce. He's basically just packaging mostly dog shit in a nice pretty box, selling it to you for $10. It crashes down to 2 or 1 or whatever the hell it is. You give up on it. People come back, they buy it up, smart money, they'll repackage it again, and they'll figure out a way to make money on it again. But it's a lot of these underlying companies he backs are just garbage. I mean, that's not the case with SoFi. I think SoFi is a great company, but it's not like the guy has some like magic touch for this. He's very hit and miss, and more miss than hit. So anyway, SoFi and Instacart CFO Nick Giovanni were both former heads of Goldman Sachs Tech Investment Banking Division, work closely together, and so they have a relationship, and that's possibly why they were able to get a piece of this IPO. Goldman and J.P. Morgan are the lead, and I guess like SoFi is basically a junior, but they're getting actual shares, getting an actual allocation. It's not just like a little bite at the apple, like they got on the Rivian deal to hose us like the hose hounds that we are. are. Being able to invest in IPO, and it goes through, the benefits of IPO, how Robinhood actually was trying to get into this as well. One person working on the Instacart deal said the company was a good fit for retail investors, given the crossover between Instacart and SoFi's relatively young and affluent customer base. This is a consumer product, which a lot of people that retail investors touch and feel on a daily or weekly basis. Um, so this is a good fit because it's actually a good company. If you look at Instacart, it is more than grocery delivery. They actually have some interesting things that they can expand into because they have, good software, AI. They're picking up a ton of data. They have an army of workers out there, and it's actually the supermarkets themselves and a lot of these other companies like Amazon. It doesn't really work because you can't get what you want. It doesn't come on time. It's not in good condition. Instacart, where actual people go out and get the stuff, and there's an accountability, and they can actually make decisions on substitutions, and you can customize things. And you can get a lot of different things through Instacart. It's really just in its infancy, so this could be a good one. It will probably go up a little bit after the IPO and then crash back down because it's probably going to come out hot and be overvalued. That's just my opinion, but we'll have to see what happens. Overall, I highly encourage you to watch the discussion with Future Investing and Steve and Tevis and Amit. I'll have to look up the proper name of their show, but it's a really good discussion because they go back and forth and give you all the viewpoints, which I just tend to be pro headlines, pro press. Any event that is sort of going to bring you a bigger, better reputation as a bigger player in the finance industry, bigger player in the stocks, bigger player in investments. I think it'll bring in members. I think, if people lose money on the IPO, I don't think they're going to turn around and blame SoFi. Why wouldn't they blame JP Morgan? Why wouldn't they blame Goldman Sachs? You should blame the management at Instacart and blame yourself for buying the stock if you didn't, do your research and you just got caught up in the IPO frenzy. Not smart there, guys. So, turning our attention to tip ranks, nothing new there in terms of rankings. JP Morgan's increase was the last. Is the pullback a buying opportunity? Just want to get an idea of where the headlines are. Raised to, SoFi got a raise from Piper Sandler. That's good. So positive. See, the media buzz, guys, is negative. Like SoFi was completely off the charts positive, and then it flipped just a little bit to negative. And I'm actually seeing that in these articles. So that's why I maybe get a little bit worried about, what the stock might do this week. I haven't actually taken a look at the options. I'm going to assume it's the normal deal where we have a bunch of calls at 850. Okay, not that many at 850. The call volume is heavy at 9 and then 950. So that's why I think 891 is going to be really sticky support again, not just because it has been, but also because I don't think Q3 is going to look as good as a lot of people expect. And these calls, it's just another way market makers make money. Yes, some of them are market makers themselves hedging, but a lot of them are retail investors expecting some kind of big announcement and stuff that would, certain retail investors always expect. They're living in sort of a, fantasy land where they think, news can break any second and go to the moon and all this stuff. So they're always buying a lot of these short-term call options. I think it's a fool's errand. I think for the most part, if you're going to play options, sell options, collect premium, let time decay work for you rather than against you. D for Danny Deals, folks. D for delicious. That is some really fine espresso out of my. I like to thank my espresso robot who makes this show possible. I can also thank Princess J just for putting up with me. What a wonderful, wonderful, beautiful woman she is. But that is an aside. I digress. In any case, guys, want to just click over on this article on SoFi Bank Without the Profits. This is another hit piece. So last week, Seeking Alpha was gushing about SoFi, and this week we start to see the negative pieces come back. This is basically a valuation argument. Not a bad article. I do encourage you to read it. I do really like Seeking Alpha, my favorite place for analysis on SoFi and many other stocks. They just have good writers who put a lot of data and a lot of thought into their articles. They're not just these fluff pieces. So even an article that's bearish on SoFi, I can read, I can get a lot of information out of. And you don't get upset at bears if they're well reasoned and they have evidence. It's like, okay, you have your opinion, nothing wrong with that. And if you're bullish a stock, you should really be reading the bearish opinions, the bearish authors, the bearish arguments more than the bullish. Don't get into that confirmation bias loop where you're just in your bubble and you're just hearing what you want to hear, guys. There are issues with the SoFi stock. There are things you need to watch out for. There is a bear case. Now, a lot of people mistake what that is, but this is kind of an interesting one on the valuation. Basically, they're saying SoFi Technology is a full-fledged bank with a charter. They're basically comparing the valuation here to JP Morgan Chase, which I think is an odd decision, but they just went ahead and picked the biggest blue chip bank in the world. So during Q2, members increased healthy pace, 44%. Lending financial services, they go and talk about how the flywheel is actually working, financial services productivity loop, and you can see how that's increased from Q2 2021, 2022, 2023, 2.7x. Ratio of financial services to lending products, 4.5x and 5.3x. So the flywheel is working. They actually acknowledge that. Then they go through and do a valuation comparison to JP Morgan. They're basically saying like JP Morgan is growing almost as fast as SoFi. You see this revenue Q on Q growth 25%. SoFi dipped down 37%. This is very, very artificial. If you look at JP Morgan's chart, I mean, they were very low a year ago. They were down, like 300 billion, and now their valuation just popped up. But this growth will not sustain for J.P. Morgan, and the growth will sustain for SoFi. I think the author just tries to ignore that fact and tries to use some clever charts to basically mislead people, in my opinion. For a long time, SoFi's valuation can be justified by their high level of net revenue growth. The growth is beginning to slow year on year. Now it isn't much higher than JP Morgan's. I think, to say SoFi and JP Morgan are both like growth stocks in the same way is just absurd. But that's my opinion. SoFi is currently unprofitable, while JP Morgan's highly profitable for a PE of 9.24. SoFi is also trading at a much higher tangible book multiplier. Yeah, of course. I mean, guys, SoFi is being valued somewhat as a growth stock, somewhat as a bank stock. It's kind of stuck in the middle with you. But JP Morgan net margin, they're saying, SoFi net margin is negative. We all know that, guys. But SoFi has yet to scale. And I think, comparing a company with an 8 billion market cap versus 450 billion market cap or whatever it's just a little bit wonky. Like, what's the real value here? You're like, yes, SoFi is pre-profit. SoFi is growing quickly. Their growth has slowed a bit on a ratio basis or a percentage basis, but in absolute terms, last quarter the growth was really, really, really strong. And also, they don't note in this article like anything about direct deposit. They don't note the actual deposit growth. Like, show me a quarter where JP Morgan grew their deposits by 25% quarter over quarter, not year over year. SoFi just did that last quarter, guys. And their direct deposit numbers are insanely positive. I mean, they were just like 400th largest bank, when they got shortly after getting their bank charter. Now they're the 90th largest bank, and they're probably going to break into the top 50 before too long at this rate of growth. A forward PE premium 2x in the banking sector seems appropriate given SoFi's growth potential. So they're basically talking about how SoFi is overvalued and could be, if the growth slows down, they'll be valued more like a regional bank going into the price action rally and then pullback. The risks to bullish case for SoFi, the potential for the company to experience a material slowdown in revenue growth, likely lead to a much lower multiple in line with regional banks. Another risk to the bull case is if economic struggles financially pressure the member base, SoFi takes losses on personal loans, unable to further engage the flywheel within their business. Of course, guys, if their loans all default and their business model doesn't work, then that's going to be a problem. Shocker. The risk of the bearish case for SoFi's potential the company to continue to acquire new members. I don't think there's that much risk because they're paying for the members. I think they are going to continue to acquire new members, student loans coming on, IPO, football season. they're going to acquire new members. Whether they're able to actually make profit on those members over time, that's the question. This could lead to a rapid improvement in profitability and further de-risk the stock. Another risk of the bearish thesis is if student loan repayments start again. SoFi adds avoids taking major losses on student loans. Yeah, so people think student loans aren't going to work out, aren't going to be a good catalyst. I disagree. Over time, student loans are going to be a great part of SoFi's business. Probably have to wait till interest rates come down. Hopefully, second half of next year start to come down, and those student loans and home loans really take off. Lastly, the risk of the bearish thesis is if SoFi begins to originate less personal loans, focus more on high quality types of loans such as mortgage and auto. Boy, I like SoFi's personal loans at those 760, 770 FICOs actually more than I like the auto loan business, believe it or not. Mortgages, I love. You make a ton of money just originating those, and then you can sell them off to mortgage services or mortgage services and servicers, and stuff like that. Key takeaway, we like SoFi as a company, but can't justify buying shares at current prices. Conservative investors can wait for SoFi to become GAAP profitable, trade at a forward PE of 19 or lower. I think that's just extremely ridiculous. Why do you have to wait to buy the company till it becomes GAAP net profitable? I think the shares are going to trade at very shortly after that. If the GAAP net profit is solid, guidance is solid, where they're just going to continue to make money, continue to go up. I think the stock price will be $13.75 early next year after that GAAP net profit. But guys, I want to ask you, what do you think about the price action both today, last week? What do you think it's going to do going forward? Stock is recovering back up to $8.72. And guys, this is critical with these SoFi sell-offs. They never really last. Like everybody, oh my God, the stock's crashing. Guys, look at this over and over. I mean, just look with your eyes. Look at these giant dips. These just happen over and over again. Immediate recovery, giant dip, immediate recovery. Now it's sold off there, but giant dip, immediate recovery. Look at all these V-shaped things, guys. Don't panic. Don't set stop losses. Happens over and over again. This one crashed all the way down on 824, consolidated a bit, then right back up, crashed again, right back up. Sold off sideways this time. This time it was the vertical pump, consolidated, came back down, vertical. It's just that's a vertical pump, vertical dump. But these dumps always recover. Look at this one, guys. Just on 831, recovered immediately. Sold off, gapped up, recovered immediately. We've been consolidating here, just sold off. I expect this to recover even today, guys. It should recover today. Second half of the day, the shorts are letting go. The shorts know the company is going to make GAAP net profit in Q4. They know Noto is not, just talking out of his backside. The guy has the extreme command of the numbers. He's dialing in the numbers. He's controlling the spending. He's controlling the growth. He controls those numbers, with a fine-tooth comb or pair of tweezers. So this is not a guessing game for Noto and LaPointe. They dial in what they want, and they take stock-based compensation, spend on members. They can dial in the products, and I think Q4 is basically a lock. Guys, so please let me know down in the comments, what do you think the effect of this IPO will be on SoFi? What do you think about SoFi's current valuation, price action? Again, guys, shorts are again starting to let go just a bit. Today, not much going on, but actually borrowing another 333,000. So they're shorting the stock today. But if you take a look at the overview, the estimated short interest is now well below 13% of the free float, and the free float on loan is only 8.55%. Shares on loan all the way under 69 million, utilization under 24%. So I think we're seeing a lot of hedging, a lot of short long stuff where they don't have to borrow the shares because they already hold the long shares to cover their short, but that can still add upward price pressure. We get some good news, we get a rally, we get a run, what have you. Guys, it's the SoFi stock. Topper time check, 8:22 a.m. and on 9/5/2023. It's a Tuesday. It's September 5th. Hope you guys had a wonderful weekend. The SoFi stock has traded 7 million shares today. It's trading at $8.69, down 10 cents on the day. It looks like that classic mountain and hump pattern we see out of SoFi. I'm expecting it to do maybe a slow push up into the afternoon, then trade sideways and probably a little bit down at the end of the day, but much just depends on what the market does. Guys, give me your thoughts on SoFi. Give me your thoughts on the Instacart IPO. Give me your thoughts on the valuation. Give me your thoughts on the short interest. Give me your thoughts on what you feel the Q3 earnings report is going to show. Consensus just came out and they are looking for minus 7 cents again. So that's at least what the market makers are telling you. Analysts at Seaport Resolution Partners lifted their Q3 earnings estimates for SoFi in a note. Now the estimates they'll make -7 up from their previous forecast of -9. So wow, that is still not great. I'm hoping for something more in the -3 area, but we'll just have to see what Noto and LaPointe are able to dial up. Guys, it's the SoFi stock. The ticker symbol is SOFI. My name is Danny Deals for Hurricane Lopez and Stock Karen. We would like to say thank you for tuning in to Poco Mas. We really appreciate it and hope you have a great day. Peace.